Stock options are like a bucket of paint. If you want to paint your room a nice shade of blue, they've got exactly the right bucket of paint for you. But you have to be careful with buckets of paints. If you drop one on a laptop, you're in deep trouble. But would you not paint your room because you owned a laptop? Of course not. You would cover the laptop or move it out of the way. That's what we do with options. We cover the risk, move it out of the way so we can take advantage of the options, just like you take advantage of a pretty blue bucket of paint to paint your room. So this is the profit lock strategy. If the stock goes up a lot, I make money. If it goes up a little, I make money. Even if it stays flat or goes down a little bit, I make money. And if the stock goes down a lot, I lose a little bit. Well, let's look at a picture. If the stock goes up, I make money. If it's flat, I make money. If it goes down, I still make money. Now, that's an important point to look at. If the stock goes down, I still make money every month. And if it goes down a lot, I'll lose a little bit. So we're talking about monthly investment returns of perhaps 2 to 5% every month. And having a goal of 25 to 50% per year is certainly reasonable at that rate. And you could get more in a good year. Now, is this a guarantee? Well, of course not. I'm not a fool, and frankly, you might be. So there's no way I can guarantee that this will give you any returns at all, but this is my target. This is what I do every month, and this is what I do every year. The reason it works is what I call the only stock market guarantee. In the stock market, there are lots of things that may happen, they might happen, they probably won't happen, but there is only one stock market guarantee, and that's that the time value of a stock option will fall to zero at expiration. It's guaranteed. And so that's what we take advantage of with the profit lock strategy. We take advantage of the falling of the stock option price to zero at expiration. So this is what it looks like. Every month, even if the stock stays flat, I get a small profit every month. Which would you rather be on, this picture or this picture, which is often a race car heading towards the bottom, just like it was at the end of 2008. So let's look at compounding over time. If we start with $10,000, over the course of 10 years, we could have $16,000 to $25,000 in the bank if you were investing in the CDs and mutual funds and stuff. You might get 5 or 10% per year every year. But with the profit lock strategy, this is what I do. I'm more in the 30 to 40% range, even 50% sometimes. And at the 30 to 40% range, I get $150,000 to $300,000 off of that original $10,000 investment. So which would you rather have, 16 to 25 or 150 to 300,000? What would you do with $150,000? Send your kids through a great college or bring your retirement in a few years? If you got $300,000, you could afford to bring your retirement in a few years. Would you just take some great vacation? You can take some great vacations with that kind of money. Or would you buy a house up at the lake and have lots of vacations? Would you help your family, maybe send your nephew or your grandkids to college? Would you give significantly to charity? You could go out to Meals on Wheels and buy them a $20,000 or $30,000 van and say, expand your territory. Here's a new van so you can do more good work in the community. Or would you like to have a nice used Buick in your driveway? If you had $50,000 to start off with, you could end up with $1 million in 10 years. If you want more out of life than just a used Buick in your driveway, then you owe it to yourself to learn more about the profit lock. All you have to do is click on the link over there, and I'll send you more information about it. Thanks a lot.